All right, we are up and running. We're working, yes. All right, so, all right, I've had a couple people ask me this in my lives over on the other app. What are some questions I should be asking my financial advisor? So I went online. I mean, there's a few questions that I have, but I wanted to see just in general what should you be asking your financial advisor because in the current market conditions, more and more people are seeking out advisors just because this is, there's just needs to be a little guidance sometimes through this market. So I found this on NerdWallet. 10 questions ask financial advisor. These are pretty good. I have a couple of others that I think are even better. Number one, are you a fiduciary? All right. So if you're a fiduciary, you're looking out for your client's best interest. Not only are you looking for items that are suitable, but you're also looking at cost as well. Sometimes cost doesn't matter if you're not being served by your previous uh, if you're not being served by your previous advisory committee or whatever. Words are hard, man. Anyway, if you're not being served by the other person, then you might just be looking for someone who will take care of your needs, even if you have to pay a little bit more to do that. How do you get paid? Are you getting paid a wrap fee? Are you getting a management fee? Are you getting an assets under management fee? Do you get a front end load fee? Those are all things that you need to know as part of considering whether or not that advisor is right for you. What are my all-in costs? That kind of gets wrapped up in the how do you get paid. That should be covered in the how do you get paid part. What are your qualifications? This is really important. It does matter if your advisor is a CFA, a CFP, Series 6, Series 7, Series 65, because all of those have different things available to them. CFAs and CFPs, if they don't have any securities licenses behind them, they may just be able to give you a plan, charge you $1,500, $3,000, $4,000, whatever, give you the plan, say, here you go, you're on your own. Good luck, have fun, don't die. If they're backed by a Series 6 or a Series 7, they will be able to help you with investments. And then a Series 6 licensed individual, just as we kind of go through this, a Series 6 licensed individual is someone who is it's considered a retail provider, so they deal with mutual funds, annuities, money markets, things like that. Series 7 has more access to more things, usually stocks, sometimes bonds, very rarely options, but they might have access to more stuff. Usually, when you hear someone say that, hey, they were a stockbroker, they have a Series 7. Series 65 is a investment advisor representative. That is someone who can give advice on investing for a fee. Some of those people may be able to execute those trades. Some of them may not. It just depends on their agreement with their company and their agreement with you. How will your relationship work? I'm not getting into that. What's your investment philosophy? This is interesting because sometimes the age of your advisor has more to do with their investment philosophy rather than how they look at your particular situation. When you get into what's your investment philosophy, you may end up getting put into some sort of a cookie cutter program. Same funds, same investment percentages. If the investment philosophy is based on your wants, goals, and needs, then you're probably going to see someone who will have a much more diversified plan and be able to customize it to your needs as opposed to a cookie cutter approach. And also, the older an advisor gets, typically the less cookie cutter it gets. Younger advisors, people brand new in the industry, brand new license, they don't know what to do. So they just do what all of the representatives from the companies come in. They say, hey, this is a good plan, do this. Sometimes that works, sometimes it doesn't. But, If that person's willing to work and then change your plan from cookie cutter to more specified, that's something you need to know. But again, that usually comes with the age of the advisor. What asset allocation we use, that's part of the investment philosophy. What investment benchmarks do you use? So, like for me, I use the S&P 500. I use the Russell 2000. I never use the Dow Jones because the Dow Jones is only 30 companies, and I don't use the NASDAQ. I use S&P 500. I use the NASDAQ. I also use the rate of inflation. And then if we want to get really creative, we go by Warren Buffett's annual returns. So that is what I use as benchmarks. You're probably not going to hit the Warren Buffett one, but it's a good one to look at to see, hey, how far off am I? Who's the custodian? Good question. Because if the custodian is that person, then you end up in a Bernie Madoff situation. Bernie Madoff was the custodian for all of his clients. Usually the custodian is another investment company. It could be any number of companies. Just a couple that pop off the top of my head. Fidelity, Vanguard, PNC, BlackRock, Invesco, and even some of them have other companies who are the custodian. Edward Jones is their own custodian of funds, I believe. So a lot of the companies, but if your custodian is the person you're dealing with, that is not going to be good. That's how you end up with the Bernie Madoff situation. What tax hit do I face if I invest with you? If that is not covered at all, and granted, most advisors are not tax advisors. But if they can give you just a general idea of what you might be dealing with, super beneficial. All right, so here's some questions that I like for people to ask me. So if you're ever going to sit down with me and ask and work with me, these are questions that I like to have asked to me, and also that you should probably be asking them if you're interviewing another advisor. What is your best case scenario for the economy and the market over the next 12 months? Look, that will give you insight into how they're thinking about what may or may not be happening over the next 12 months. Now, if you want to ask a follow-up to that, you could ask, what data or evidence do you see that leads you to that conclusion? If they can't back that statement up, that's a problem. That means they're just going off what has been given to them by their supervisors, their higher-ups, the reps that come in from the other companies. They're being fed a certain line, and then they're feeding it to you. If they cannot back it up with any data or evidence as to why they think that, that could be a red flag. And then same question, opposite side, what's your worst case scenario for the economy over the next 12 months? And again, what data or evidence do you have to support that conclusion? Very important follow-up. If they cannot answer that, again, it could be a red flag. And then this is also so important when you're dealing with someone who is Series 6, Series 7, or Series 65. If you have CFAs and CFPs that aren't licensed, it doesn't matter. They're not handling your money anyway. They're just giving you a plan. If you're dealing with Series 6, 7, 65s, they're handling your money. The question you need to be asking is, what discretion, if any, will you have in my account? Now, what discretion is, that means that I can trade for you based on a set of parameters that you've set out. I can make decisions on price or time or company and when that should be executed. If you're going to have someone have discretion in your account, they better know what the absolute crap they're doing. Because if they don't, they're just going to churn you constantly. And again, this goes back to the fees. They're going to churn you constantly in your account to create commissions for themselves. And maybe it's not the right investment solution for you. Because maybe they decide to put money somewhere with a company you don't agree with. Let's say that you're anti-gambling and they want to make a discretionary trade in your account. They see that MGM or Wynn is at a really good price to buy, but you are opposed to gambling. If they make that trade for you, maybe that's not the best trade for you because you're opposed to it. So there are definitely considerations when it comes to whether or not they have discretion. If you're going to give someone discretion, you definitely need to lay out what parameters you want. Make sure it's very clearly defined on paper so that they can follow that, and also make sure you keep a copy of that so if they make any decisions outside of those parameters, you have recourse over that person. The biggest problem in the financial advisory world right now, and probably always has been, is that most advisors are just salespeople. I hate to say that, but they just are. I would say probably close to 90% of advisors are salespeople. 10% actually know what's going on out there and can help walk you through turbulent times. It's just something to think about. So anyway, I hope this helps. The 10 questions, again, as we scroll down the page: are you fiduciary? How do you get paid? What are my all-in costs? What are your qualifications? How will our relationship work? What's your investment philosophy? What asset allocation will you use? What investment benchmarks do you use? Who is your custodian? What tax hit do you face if you invest with the advisor? And then my questions: what's your best case scenario for the economy or the market for the next 12 months? What data or evidence do you have to back up that thesis? What is your worst case scenario for the economy over the next 12 months? What is your data or evidence that you have to back up that thesis? And then lastly, will you have discretion in my account? Super important questions. If you guys can think of anything else that you might want to ask an advisor, drop them down below. And hey, I hope this helps. And thanks for watching. And y'all have a good day.